Hi everyone, this is Gary, and we're going to be I'm going to be showing you how to do the problems for Module 3, Week 3. We have two problems this week, P 3-36, and then continuing problem 3-45. Both of them are pretty much the same. They both have to do with what's called adjusting entries. Now, if you recall from the last module, week 2, we ended up with what was called a trial balance at the end of those problems. The trial balance from last week is actually what's called an unadjusted trial balance. And the reason it's called unadjusted is because we haven't done what's called the adjusting entries yet. And adjusting entries are what is done at the end of a period such as a year, let's say, or a month. At the end of each period, we have to reconcile, so to speak, revenue and expenses because of the accrual basis of accounting. We have to make sure that all revenue is accounted for in the period that the revenue was earned, and we have to account for all expenses that were incurred during that period. And not all the time are these recorded during the course of the period. So at the end of the period, we have to do what's called adjusting entries. And that's what we're going to be doing this week. We're going to be recording these adjusting entries, and we're going to be taking from the unadjusted trial balance, the balances that are there, and then we're going to be recording certain adjusting entries. Now you want to keep in mind that an adjusting entry will always affect an income statement account, meaning a revenue or expense, and it will also be affecting a balance sheet account, either an asset, a liability, or an owner's equity account. So just keep that in mind. Now you'll see on here that we have a place for the journal entries, and all of these are done at the end of the period on December 31st. You'll have 5 adjusting entries to make this week. And over here, you'll see that is a place for you to do your calculations. So you'll notice there's a calculation A for the adjusting entry A, B, and then it skips C down to D and E. The reason it skips C is because in the problem, they actually give you the amount. There's nothing that you need to calculate. So that's why that is skipped. So what you want to do, for an example, is let's say that it tells us that there is in the prepaid insurance account, that there is at the end of the period $500 remaining of prepaid insurance. Well, what did we begin with? The way you know what to begin with is to look at your trial balance, your unadjusted trial balance. And you want to put in the balance that is on the unadjusted trial balance prior to the adjustment. So you look at your unadjusted trial balance, and let's say that it's $1,000. And they're telling us, this is just an example that I'm giving you, that there is $500 in prepaid insurance remaining. So you would put in the $500 there, and you'll see that you have a $500 insurance expense, which means that of that prepaid insurance, that $1,000 of prepaid insurance, we have actually used $500 of it. So now we have to record a journal entry to take into account that adjusting entry because we no longer have $1,000 in prepaid insurance. We used $500 of it, and we have $500 remaining. So we want to record the expense. So you would record it simply by putting insurance expense. You want to record your debit first. So we're going to debit the expense for $500, and then we're going to credit the prepaid insurance, which is the asset. Because when we prepay something, it is an asset. So we're going to credit that, reducing that asset called prepaid insurance. So you're going to do your calculation here. You're going to determine what is your expense or what is the revenue that's being adjusted, and then you do your adjusting entry over in this table here. So you'll have 5 adjusting entries. Here are the available accounts that you'll use for the journal entries. They pretty much follow in order, so you should have no problem choosing the different accounts to record those entries. After you're done recording the journal entries, you then go to requirement 2, which now this is going to look a little bit different. We've done T accounts before, and this is just a different formatting of the T accounts. So don't be thrown off by this. It looks entirely different, but I will show you what you want to do with each of these accounts. Now, first of all, I want you to notice that the account number you can ignore. You can also ignore this post-reference column. That is not something that we're going to be doing in this class. But you'll notice that each of them show a balance as of December 31st. So where do you get these balances from? You're going to get these from the unadjusted trial balance. If you have not done an adjusting entry to a particular account, then all you do is you carry over the balance that is in the unadjusted trial balance. So accounts receivable was not affected by any of the adjusting entries. So all you do is look at the unadjusted trial balance given in the problem, and you write down whether it was a debit or a credit balance, and you would put it over in this column called the balance. So let's say that the accounts receivable in the unadjusted trial balance, it's an asset, so it would have a debit balance, and let's just say it was $1,500. Again, this is just an example. So if your adjusting entries that you did in requirement 1 did not affect an account, you just bring over the balance that's on the unadjusted trial balance, and whether it's a debit balance or a credit balance, this is where you list it. Now, if it did have an adjusting entry like we did with the prepaid insurance, then you're going to bring over, remember the balance we said was $1,000. That's what it was as of December 31st. But then, if you recall back in requirement 1, that we did an adjusting entry, we debited insurance expense, and we credited prepaid insurance for $500. So now we go here under A, December 31st A, that's our adjusting entry A. We did a credit to prepaid insurance of $500. And now we have remaining, since we had a $1,000 debit balance and we did a credit of $500, we now have a $500 debit balance. And that's all you have to do. So on any of the accounts that you had an adjusting entry, you want to carry over the balance from the unadjusted trial balance. You then record what it is that you did in the adjusting entry, whether it be a debit or whether it is a credit, and then you put the remaining balance, either debit or credit, here. So this is your starting balance, this is your adjusting entry, and then this is your balance after the adjusting entry. So you'll notice that not every single account has, you'll see here is A, here is B, here is C. So these are the accounts that you'll have adjusting entries, and you won't be just carrying over the balance, but you'll also be putting in the adjusting entry and then carrying down the new balance. Now, after you're done recording all of these accounts and making sure that you have either a debit or credit balance for every single account there, you then take these balances and you just move them over to the adjusted trial balance, because now we've done our adjusting entries. So this is now called an adjusted trial balance. So all you do is take the balances that you ended up with. So here we had a $500 debit balance in prepaid insurance. So we go to requirement 3 and we just put in $500 under the prepaid insurance because we have a debit balance of $500. After you're done entering all of those, you will total them up, total all the debits, total all the credits. And remember that in a trial balance, your debits must always equal your credits. If they do not, you want to go back and see that whether you made a recording error, that maybe you bought over a wrong balance, make sure your addition and subtraction are correct. If they are, then you need to go back to requirement 1 and make sure that you did your calculations correctly and that you recorded your entries correctly. Okay, so now we have our adjusted trial balance, and then requirement 4, don't forget to do this. It just asks you a question about assuming the adjusted trial balance has total debits equal to total credits. Does this mean that the adjusting entries have been recorded correctly? And then explain. Don't just say yes or no. Give me a reason why it is yes or no, and you can just type in your answer in one of the cells here. CP 345 is pretty much the same. You're going to do the same thing that you did in P3-36. You're only going to have one calculation to make. Everything else is given to you. So again, you're going to have 5 entries, journal entries. Here are the available accounts that you're going to use. And then once you do all your journal entries for your adjusting entries, this is back to our regular T accounts. Now this is a continuing problem, so you'll see dates here. You're going to carry that over from the previous week. Whatever your balances were there, that's what you're going to put in. And then this is where you would put in your adjusting entries as well. So you'll have new T account balances, and after you've done all the adjusting entries and carried over all the balances from the unadjusted trial balance, And then once you've done the adjusting entries, you want to put all those into these T accounts, then carry your balances over from the T accounts over to the adjusted trial balance, just like we did in the first problem. Okay, that is pretty much it, and I hope this helped you. If you have any questions, please don't hesitate to reach out to me and give me a call or shoot me a question in the individual forum or the question to instructor forum. Thank you so much. Bye now.